Hi, in this video I'll show you how to properly collect information from a borrower for a loan, and a loan application specifically. So let's start off with a loan pre-approval questionnaire. This loan pre-approval questionnaire is a Word document that includes many sections that describe the borrower. So the first section is loan information, and have them fill in the transaction, whether it's a purchase or refinance, property address, purchase price, or market value. Now if they're doing a purchase, then we want purchase price. If they're doing refinance, we want them to estimate the market value as best as they can, even if it's through a market valuation website like Zillow.com. And amount desired, loan amount desired. Then you have them fill out their application section. This is very important: date of birth, social security, phone number, email. Now some clients might feel uncomfortable providing this date of birth and social security on a Word doc. You can have them either fax it to you or give it to you over the phone, but either way we want to have that inputted. And the next section is the employment section. If the borrower has worked in this position for more than 2 years, then you can just simply have the current employer. If it's a new job, less than 2 years of employment, then you want the previous employer. Same applies to co-applicant and the co-applicant employment information. And after that, you have them fill out the family dependents, the name, relationship, usually son or daughter, age, marital status. And if they have any other loans, auto loans, student loans, have them indicated here. The next section is all real estate owned. Now if a borrower has 2 properties or 3 properties, this is where you'll put all the property addresses down, including the subject property. So let's start off with their primary home, their secondary home, and perhaps an investment property. Put down the bank that the property has a loan against, and indicate whether it's primary, rental, or second home, date of purchase, monthly mortgage. And this is very important: taxes and insurance. If the taxes and insurance are included in the monthly mortgage, you can leave it blank. If it's not, then we need to put that down as a monthly cost. And you can simply break it down, like taxes would be $400 a month, taxes, and then comma, maybe $50 a month for insurance, something like that. And typically you'll want to have your borrowers fill this form out, so it'd be nice to just tell them ahead of time what you expect them to fill out, so that there won't be any mistakes, or minimum mistakes. And if it's a rental property, have them fill out the monthly rent. Now on a lot of investor profiles, you'll see that they're going to have more than 10 properties or more than 4 properties. If they're savvy enough, they will insert a line here. Now if they're not and they forgot to do that, you can also do the same. But what I would recommend is going into the REO sheet, which is the real estate owned sheet. I'll show you in a second right here. Real estate owned sheet, and let's say if they have a lot of property, this is where you want as an addendum to the mortgage application. You want them to fill out the property address, date of purchase, and so on. Pretty much the same, but you have a lot more room to work with. Okay, so back to this. Other assets, you want them to fill out this as concise as possible: checking or savings, cash on hand, 401k, IRA, and so on and so forth. So now that you have the entire pre-approval questionnaire completed by the client, they'll either fax it or email it to you. The next thing you want to ask them to provide are items on the mortgage application checklist. And these items are crucial because now you're validating against what they put in on the application. So you want the last 2 years of tax returns. It says only first page needed for now, and that's a starter because most clients do not feel comfortable providing you with the whole tax return, but eventually we'll need it. So if you have a client that has a whole PDF of the entire tax return, collect it. If not, at least collect the first page of the last 2 years. Last 2 years of W-2 or 1099, bank statements. Now with bank statements, it's very important that you collect at least the current bank statement. If you can, the last 3 months would be perfect, but at least the current one. And all pages. When I say all pages, you have to really collect it as if it's a bank statement that's been sent from the bank directly to the borrower. So these days, a lot of banks are going paperless. So if they have the regular monthly statements from the bank, then they can simply Xerox that front and back, all pages, and PDF that to you, or fax it to you. Otherwise, then you recommend that they go to their internet site for the bank and print statement, but not print screen. There's a distinction. When you print screen, it's not acceptable by the lender. When you print statement, it actually prints it in a really nice format in a PDF file with all the pages of the statements. Same with the retirement statements, investment statements, and so on. And you want to collect at least 2 picture IDs of government issue IDs. Driver's license, passport. And insurance and tax bills for all the real estate owns. And a mortgage invoice, which is a mortgage payment voucher for all the real estate owned. And if they have any rental property, then you want to include leases, 2 years. They must have 2 years of rental history and 2 years of work history, and you can include their employer, address, HR contact, and phone number. That's very important, because if you have that information up front, when we go ahead and go into the application, then you have lesser headaches, therefore. So after you've collected the mortgage application checklist and the loan pre-approval questionnaire, you should have enough information to start entering this loan application into loan origination software such as Calyx Point. And that concludes this video.